Well, good morning, everybody. Maybe I need to move it closer. Is that better? Good morning, everyone. I want to just thank you all for joining us today. As the ranking member of the committee, I'm privileged to work alongside many of you to improve the lives of those who have served our country. Our conversation today will focus on one of the most life-changing benefits offered to our service members and veterans, which is the home loan program. Unfortunately, a lot of veterans don't know about it, but I've encountered veterans in some of my travels on CODELs, who report being able to own homes at an earlier age than many Americans. It's possible. The original GI Bill has been cited as the catalyst for the growing middle class in America. It offered many World War II veterans the opportunity to go to college and own a home, which is quintessential to the American dream. And we know that the generational transfer of wealth that followed World War II was very significant. And that's why the VA home loan program is so important, because it offers veterans the chance to settle down and become part of a community after they've been ordered from duty station to duty station around the country and oftentimes around the world. So it is a vital benefit that we want to ensure veterans are taking advantage of. Now, the decision to buy a house is a big one, and it's often the most expensive purchase that anyone will make in their lifetimes. And even with VA home loans that help make the dream of home ownership more affordable and attainable, veterans and their families can fall on hard times and need additional financial assistance. And so today we'll also discuss what alternatives veterans have to being foreclosed upon. And as you know, I've been very outspoken about VA and the Trump administration's decision to end VASP, a program that was working to prevent foreclosures on veterans' homes. I strongly disagree with the approach taken to end a program before having something else in place, such as the partial claims program that the Republicans are pushing for. To be clear, none of my Democratic colleagues disagree with that. I don't disagree with that. But what we do disagree with and find morally reprehensible is the ending of the program abruptly and not offering a better policy solution that doesn't involve veterans and their families being forced out of their homes. Now, because I know that's not what any of your organizations want either, I hope we can take this time to engage in supporting veterans who want to buy homes as well as those who are struggling to stay in their homes. Now, before I open up things for discussion, please remember that this is a conversation and each of you are welcome to speak on any topic we raise today. If you'd like to speak, just simply turn your name card, your tent card, on its side. My staff will record your interest in speaking, and we'll try to call on you in the order that you put them up. And after speaking, please lower your tent card. When speaking, please turn on your microphone. You do have to pull it up closer to you and speak directly into the microphone. And with that, let's go around the room so everyone can briefly introduce themselves. We'll start over here with Madison, with the Mortgage Bankers Association. Madison, go ahead.
Congressman Decano. You guys hear me okay? Maybe? Okay. Is that better? It is? It's red. I can use my outside voice if I need to, but you're better at that than me, Rachel. I'm Madison Roan with the Mortgage Bankers Association. I do our advocacy for the House Democratic outreach, and it's been a privilege to be able to work very closely with a lot of you here on ways to improve the VA home loan program, and I'm really looking forward to our discussion today.
I'm Christina Keenan, the Legislative Director at the Veterans of Foreign Wars, the VFW. As part of our economic opportunity portfolio, the home loan program and ensuring that it is functioning properly is one of our priorities. So Looking forward to discussing with everybody here today. Thank you.
Hi, my name is Son Nguyen. I'm the founder president of the Veterans Association Real Estate Professionals. We are a VSO that is advocating and for the VA home loan program, financial literacy, and economic opportunity, as well as housing stability for the veterans. Looking forward to discussing all those things with you today. Thank you.
Thank you, Representative Tucano. I am Joseph LeMay. I am an Associate Legislative Director for Disabled American Veterans, and the Home Loan Guarantee is part of my portfolio. I'm looking forward to bringing up any points relevant to this discussion. Thank you.
Good morning, Catherine Monet, CEO, National Coalition for Homeless Veterans.
Good morning, Sarah Brown with Pathways to Housing DC, and I'm the director of our Veterans Housing First program, so we work to find safe and affordable housing for veterans.
Good morning, Mike Calhoun, president of the Center for Responsible Lending, and thank you, Ranking Member, for your leadership on this issue.
My voice carries. Good morning, everyone. My name is Julie Howe. I'm Associate Legislative Director with Paralyzed Veterans of America. Forgive my appearance this morning. It has been a morning.
Good morning, everyone. I'm Caitlin Benoit, Director of Legal Advocacy with the National Association of Realtors. We're very happy to be here today. The Realtors, they love the home loan program, and we love to support veterans and getting them into homes.
Good morning, sir. Eric Johnson with the American Legion. I'm also a Marine Corps veteran, a homeowner through the VA Home Loan Program, and a beneficiary of the VAST program. Thank you.
Hi, everyone. Matt Douglas with the Housing Policy Council. We're an industry trade group that focuses on all things mortgage, but a lot of my time over the last few years has been focused on the VA program, both due to the, frankly, crisis that the program faces with loss mitigation, but also some of the other challenges that have risen with just the growth and utilization of the program. So look forward to talking about that with you today.
My name is also Matt, last name Schwartzman, with the Reserve Organization of America. We're the only national military organization that solely and exclusively supports the Reserve and National Guard. The access to the VA Home Loan Program is a relatively newer addition to ROA's policy portfolio, and I'd like to credit ROA's policy fellow Jake Fales for his initiative in elevating this to our priority list. Thank you.
And hi, I'm Steve Sharp. I'm with the National Consumer Law Center. Really appreciate your leadership and taking the time to do this. I'm a senior attorney. I focus on mortgage issues, especially mortgage servicing issues. So the health of the program, the need for better assistance for veterans when they fall behind has been an absolute priority for us, and we really appreciate you all for being here and for joining this, or for having this conversation with us.
Mr. Calhoun, could you is your mic turned on?
I'm sorry. Thank you. Is that coming through better?
I just say because we're recording this, so.
Yes, thank you. I apologize for that. the changes in the overall mortgage market and the lessons learned since the Great Recession really provide a lot of guidance of where we are and where we need to go. First, good news is the VA home program has grown dramatically over the last 10 years by growth of over 75%. There are nearly 4 million loans outstanding, and this is a huge success story. It also, though, elevates the need to make sure that the program actually supports veterans and helps them stay in their homes. Since 2021, the VA has offered 2 home retention programs. The VA partial claim program that they operated and the VAS program. The VA partial claim mirrored closely the partial claim which FHA has introduced and done so successfully. And the key is it allows borrowers to put their arrearages to the end of their loan and keep their payments the same. Now, importantly, VAS went a step further that's often needed, which allowed borrowers to reduce their payments if they needed to. And just the contrast is the other option, and the only option really available to veterans now, is to recapitalize, essentially add an additional amount to the monthly payment to catch up the arrears, which bumps their monthly obligation. And one of the lessons from the Great Recession is it's absolutely critical to avoid that. And in fact, payment reductions were the most successful strategy during the Great Recession. As we've talked about here, at the end of April, the VAS program was stopped. We now have, as of the end of March, over 92,000 veterans facing foreclosure with their loans being over 90 days delinquent, with nearly a third of those already in the foreclosure process. So this is not a hypothetical threat for veterans. People are at risk, and people are leaving their homes as we sit here and talk to Dave because they don't think they have any other options. So let me talk about what the options are very quickly, because we have a distinguished group here that will provide a great discussion. The 2 big changes in the mortgage market since the Great Recession is we learned, and with the work of the Mortgage Bankers Association, the realtors, and others here in this room, outside of VA, there is a broadly used, standardized, effective loss retention system. And I think notably, and I'll cite papers released this week from the Housing Policy Center, which in detail documents the performance of those programs and shows not only are they extremely effective in keeping the home buyer in the home and avoiding preventable foreclosures. There will still be some foreclosures. Center for Responsible Lending is a policy affiliate of self-help credit unions, and we have done over $7 billion of home lending where we had all the credit risks. So we are used to operating credit programs and mortgage programs and understand the day-to-day mechanics and bottom line needs of it. The other thing it showed was that this approach of having the arrearage added into the loan really was elevated during the COVID crisis, when we had millions of families facing foreclosure because of the financial disruptions. It was implemented administratively by FHFA under then Director Mark Calabria, and it was hugely successful. It kept probably 1 million foreclosures from occurring and got families through the COVID crisis. At the beginning of the COVID crisis, and we were among these, the prediction was there would be a flood of foreclosures, not as large, but not unlike what we saw in the Great Recession. and that it would disrupt the whole housing market. To their credit, FHFA stepped in with this program that allowed people to put the arrearage at the end of the mortgage. And again, it was used by over 1 million borrowers, and the data is in these recent papers put out by the Housing Policy Center show, again, not only effective for the borrowers, but it saved money, not cost money, saved money for the lenders and the guarantors, because as all lenders know, foreclosure is not only a tragedy for the borrower, it is very expensive for lenders and guarantors, even in the best outcomes.
So, Mr. Calhoun, this FHFA administered program, it was during the pandemic, you're saying?
Yes.
And it was a program that you moved the arrearage to the end. It was like a partial claims
Yes.
operation. And you're saying it worked out for the private lenders as well as for the government. It saved money on both sides.
Yes, and widely adopted. I mean, if this is one of the things that I think drives everybody here crazy, is that veterans are getting worse treatment on home retention programs than virtually all the other home buyers in the country. And that just seems upside down.
Explain that a little more.
Well, if you
How are
have,
veterans getting worse treatment in this case?
So if you have today a loan, so-called conventional loan, insured, purchased and insured by Fannie Mae and Freddie Mac, which by themselves are the majority of the market,
right,
over 50%, and you have a financial crisis, there is a waterfall, and in that is this equivalent of the partial claim. They will put your arrearage at the end of the mortgage with no additional fees or interest, and then it's just due when the loan is paid off. It's an additional, just like the partial claim credit. And then the waterfall, and we can get in details, includes other options. The thing that they do that even goes further, I want to make it clear that 1850 is a important step further, but still leaves veterans without the tool that they even had 5 years ago of being able to get a reduction when warranted in their monthly payments.
And you're saying this FHFA remedy doesn't increase the payment. It just makes the arrearage due at the end of the loan.
Right, you continue with the mortgage, and this is getting in the wonky side of it, and this is the second big thing that's happened. We've learned this lesson since the Great Recession, and one of the things, and I think you'll hear this from other people here in the room, is there's a broad consensus about this. This is not a controversial program. It's a program that's demonstrated to work and is, again, available to the majority of home buyers in the country.
If you can take us to the wonkiness really quickly, because I want to get on to the next.
All right, this is the wonkiness, okay. Is that the other thing that happened and makes this program reform so urgent is the mortgage market for the last 2+ decades has essentially been a period of steadily declining interest rates. And we now have hit an inflection point where essentially that is over. That was the result of, fortunately, things that have improved. I mean, many of us here had mortgages in the mid-teens back in the 80s, so it was a trend down from that. And then since 2008, it has been deliberate federal monetary policy has pushed interest rates down, and that's included mortgage rates. Many people think 3% is the normal mortgage rate. I mean, it's really more like 5.5 or 6. But the big point is the era of declining interest rates is over, and that's had huge impacts. And one that caught people somewhat off guard is it dramatically changed mortgage servicing. And here's why. So it used to be that when someone fell behind, the loan was pulled out of the mortgage pool, whether it be GSE or Ginnie, and then be modified and sold back into the pool. And that works in a declining interest rate environment because a mortgage, the amount that you can sell the mortgage for depends on the interest rate on that mortgage in relation to current mortgage rates. So for the last 20 years, when you pulled that mortgage out of the pool and modified it and then put it back in the pool, resold it when it was reperforming, you sold it at a premium because the mortgage kept its interest rate and had a higher interest rate than the market rate. And so it was worth more than par, 100 cents on the dollar. Now, to give you an example, we're in the exact opposite situation. If you would to take today, for example, a 4% mortgage and apply what we did for the last decades, pull it out of the pool, get it reperforming, resell it. Today, it would sell at about a 10% discount. So if you have a $250,000 mortgage, that's a $25,000 loss that the servicer or the guarantor has to absorb, and no one will do that. So what we used, the primary tool and sort of the normal operating procedure for 20 years, got cut off when interest rates hit that inflection point in 2021, and by all projections, we are not going back to a period of that steadily declining interest rates. And so that coincided with the COVID crisis, and that was one of the reasons that this deferral, that this moving the arrearage to the end of the mortgage became so essential in the COVID crisis, because what had been the long-standing tool that worked pretty well was simply no longer available and not likely to become available again in the future. So that is the wonkiness of the urgency, and it hit during COVID, and VA responded, just as FHFA did, and as FHA did. They have continued those programs. So they're available for GSE borrowers and FHA borrowers, but with the VA's termination of VAS, those borrowers are right now left out in the cold and getting deeply second-class treatment on their home loans, which is just intolerable.
Thank you, Mr. Calhoun. I'm going to want to move on to Mr. Douglas from the Housing Policy Council and Madison. Is it Roan or Rone? Roan. I have somebody I know with the exact same spelling who puts an accent at the end. Is Mr. Rone, my colleague in high school. Okay. Matt, why don't you go first? The question is, what else should we know about the role of the VA loan program? What role does it play in the housing market? So go ahead.
Yeah, so it plays a critical role, and I think you're going to hear a lot of the same themes.
Is your microphone turned on?
It is on. I can
Okay.
come a little closer.
Yeah, thanks.
I think you're going to hear some of the same themes from me, though, that this is a program that has undergone just immense growth. It's a real success story, and because of the value it provides to veterans. If you see the growth of the program since 2010, we're talking a doubling of loans. What that means, so even last year, which was a down year in mortgage, is still about 25% higher than one of the highest years prior to 2010. So the program's grown a lot, and it's because of the value it adds to veterans. So I think that's again, a generally agreed upon concept. What we would question is, has the VA received proportionate resources for technology, staff, program development to deal with that growth? And I think my unequivocal, very emphatic answer is no, they have not. Some of that is tough facts. Mr. Calhoun laid out interest rates change. That was not the VA, public servants' fault, but did they have the tools set up to work for veterans in all interest rate environments? No. Did some of the bespoke things about the program that worked well when it was a bespoke small program, do they work as well when it's a major part of the mortgage industry? I think our answer is no. So most clearly, and what we spent the most time on here recently, is this servicing piece. So that's where I'll try to add a little mortgage industry color to Mr. Calhoun's points. But fundamentally, we join with Mr. Calhoun and a number of the organizations in this room that veterans should have the best mortgage options available. And I'm telling you, on key mortgage pieces, like if you get behind on your mortgage, we're not at parity, we're not at equality, it's second class, not best in class, it is worst in class. A veteran would be better off in virtually any other government program than the VA program, and that's outrageous. I know that's universally outrageous, but have we given the VA team the tools, the resources, the authority to bring parity and actually make it into kind of the gold standard? And I think our answer is, again, no. My number's a little different than Mr. Calhoun on how many people we think are facing foreclosure. I'll get to why that's crazy, that I don't have good transparency into the number. His number is different than mine, which is different than Madison's, because the VA does not publish loan level data on a monthly basis like FHA does, like the GSEs do. So good faith people in this room are trying to estimate, proxy, survey. That's crazy. We have templates that other government agencies use. The VA should publish similar data so that every stakeholder in this room is talking from a level playing field, watching emerging crises happen, so that when I come to your office or any office 3 years ago and say, this is gonna be a problem, it's not just Matt from the mortgage companies, it's you can see this is a developing issue. What are we gonna do when in October of 2022 they end a valuable program? What are we gonna do for the X number of people? But getting the number has been challenging. So that my number's different than Mr. Calhoun's, but it's getting at this other issue.
What is your number?
So my number's 67,000.
Right, and you're 80,000, and you're 90,000, is that right?
Yeah.
Okay, I was wondering why that was.
No, but it's the right question to be asked. Why are people of good faith coming? We all recognize it's a problem, but sizing and scoping is hard because the VA has the data. Mr. Takano, this end of the table could get the information. The rest of us have to look other places, close an eye, squint a little. That's deeply frustrating as stakeholders. So when we're talking about how effective will HR 1815 be, our estimates are different because we're starting from a different denominator of the problem. So one thing I'd like to also point out in servicing, because I, again, just second what Mr. Calhoun was saying, is even if HR 1815 was passed into law, signed by the president today, I'm still telling you, we believe VA would still have worse options than FHA, USDA, and rural housing, and it's because this partial claim, which is a good tool, we think they should have it, it doesn't provide payment relief. So for a certain type of borrower who's had a temporary hiccup, they lost their job, but then they regained it, this tool is gonna be great. It's gonna take those missed payments and put them at the end. Very effective. If instead the borrower had a situation that's more permanent in nature, they got a divorce, they've had a new not service-related disability, their income is challenged, this tool is not going to provide them the payment reduction that they would get if they had an FHA, USDA, or Fannie Freddie loan. And this makes people, I think when you realize that, it's outrageous. It's a good tool that you're providing, but it's not sufficient. And so that's one of my messages, that this is the beginning of fixing and giving them the tools. It's not the end. It's not a victory.
So, Mr. Douglas, one quick question.
Of course.
And for all of you there, help us understand what tools the other agencies have. So is it similar to VASP, or is it different from VASP?
No.
Is it equivalent to VASP?
Yeah, so every program has a tool. Some of them look a little different, the mechanics, the nerdiness, but all of them, and I can get into all of that if it's helpful, but they all can drive payment reduction for borrowers in certain categories.
So that's the key, the payment
It is.
reduction.
Payment reduction is the key.
Reduction tool. We don't have to get into the particulars now.
You got it.
I want to give Ms. Roan a chance to weigh in here. Make sure you turn on your microphone and move it close to you.
Okay. Yeah, I don't have the luxury of Julie with the good projecting voice. Well, thank you again for having me and having MBA here, part of this great discussion. And thank you so much, Representative Takano and Representative Pappas, on your leadership on getting to where we've gotten with passing HR 1815 through the House. I think, yes, I absolutely agree with Matt. This is, I hope, a starting point, but with the elimination of VASP, it is incredibly important to expedite that and get that passed in the Senate as well, which I know that's a priority that we all here share. I think I'm not gonna I'll really just strengthen a lot of what Matt and Mike Calhoun has already said, that we do need a program that works for everyone, and I think it is really unfortunate that we have a VA home loan program that is far from parity, and I would just agree with everyone else that it is outrageous, it's disappointing, and we can and we have to do better. With the VAPS sunset, I mean, that's only increased the urgency of passing HR 1815 to get the most immediate relief possible for veterans. The sunsetting the program prematurely has left more than 200,000 VA borrowers with no viable loss mitigation alternative. And for over a decade, VA borrowers performed as well, and times even better, than conventional borrowers. So the divergence in delinquency rates we see today is not because veterans have become riskier borrowers, it's because they've had fewer effective tools to recover when hardship strikes. That's the story the data tells, and it underscores the need for parity. COVID exposed a structural weakness in the VA program, the lack of standardized, scalable loss mitigation tools. FHA and the GSEs swiftly developed robust post-COVID options, including partial claims and streamlined repayment reduction programs. Again, all of them having that repayment reduction option, including partial claims. Again, in contrast, VA borrowers exited forbearance into unaffordable modification or repayment programs. A temporary fix in VASP did help, but when it was sunset, it left hundreds of thousands of veterans vulnerable again, with delinquency rates rising as a result. Of the approximately 200,000 VA borrowers struggling, and this is where our numbers are a little different, this includes about 170,000 delinquent loans and just over 30,000 in foreclosure, based on MBA's National Delinquency Survey, which is based on first 30 days delinquency rates. For every month of inaction, more loans become ineligible due to the 25% unpaid principal balance cap, which limits how much assistance can be provided based on loan size. And I just, on a personal note, I think as we continue, and I know a lot of us are on the same page here, but I think it's so important to remember and to remind our peers when working on these issues that these are not just numbers or data points, but these are military families, often first-time home buyers, and disproportionately from underserved communities who are going through probably the hardest time in their lives, who are struggling with keeping probably the biggest purchase of their life. MBA fully supports HR 1815 as passed and urges rapid Senate adoption, and everyone here to continue to advocate for that to be adopted in the Senate. Because, well, VA's current loss mitigation options are, as we've all talked about today, are simply failing veterans. VA borrowers face ineffective and unaffordable options. According to MBA's latest loan monitoring survey, 75% of VA modifications remain current, but that still leaves 1 in 4 borrowers at risk, especially since many current options, again, increase monthly payments, which undermines long-term success. Performance on VA modification lags behind peer programs, as we've discussed, with many borrowers still at risk of default. And I, for the sake of time, won't get into some of the other FHA and USDA and GSE programs, because these have been iterated already, but again, we know these work. We know these work, and we can look at the data that we have at MBA, that a lot of others have, that shows the success of these programs. And it's the most effective tool that we know of at keeping borrowers current. So a permanent partial claim program would make a lot of progress in this area. I think as Mike and Matt also said, the VA home loan program has grown substantially over the last 15 to 20 years, but operational capacity has not kept pace. It took 22 months to stand up VASP, highlighting persistent resource constraints. And we don't see a reason to think that without more funding and focus on this program that will improve, even with the implementation of partial claims once that's passed into law. And so we have consistently at MBA requested increased appropriations for VA technology, staffing, and infrastructure, and continue to advocate for increased resources for VA. We appreciate congressional efforts in 2022 to modernize the VA appraisal process. That's another example of bipartisan action to improve the borrower experience, but again, another example of where that's the beginning and not the end. We strongly support ways to look at pragmatic ways to further streamline the appraisal process at a VA. And then while loss mitigation solutions are urgent, so is the infrastructure around them. One area where VA still lags is transparency, which we've already demonstrated today with the different data points that we have from coming to different calculations based on the resources that we can get our hands on. And of course, ensuring better outcomes for veterans also means making sure the VA program itself is operating transparently and with resources it needs to succeed. Congress should also ensure that funding fees remain aligned with loan performance risk and dedicated to supporting the VA home loan program. And that's something that MBA has repeatedly advocated strongly against, is using any VA home loan funding fee to pay for non-related veteran benefits. I think that's demonstrated here today. We need more resources for the VA loan program, not less. And I also look forward to working with all of you, the VSOs and consumer advocates, and of course my peers in the industry, as we try to ensure that every voice in the veteran housing ecosystem is heard and unified. And I think, thank you so much for putting this together as a stronger coalition. I think will result in stronger results for veterans. And MBA is very, very proud to have a strong representation of lenders who support the VA home loan program, and we will do everything we can to support the long-term success of the VA program. So with that, I will pass it over to.
Thank you, Madison. I want to just acknowledge the colleagues that are here today. Delia Ramirez from Chicago, Chris Pappas, New Hampshire, Dr. Maxine Dexter, Oregon, and Julia Brownlee from my own home state of California. So thank you all for showing up today. It's really great to see you here. I want to, Steve Sharp, I had you a little further down, but I think what you have to offer us is kind of maybe an enlargement of what we've heard or an embellishment of the same topic.
Sure, and thank you for your leadership and for for gathering this conversation and making this all work, because you're hearing such a clear message, right? That industry, VSOs, consumer advocates, we are very much talking with the same voice here. And the main thing is making sure veterans have parity when they fall behind and they have financial hardships. Financial hardships and dealing with them are really a bedrock of all of these federal loan programs. We know they happen. To make a stable housing environment, we have to have programs in place that work. And it is outrageous, as we all have said, that veterans have far worse options. And important to recognize, as Matt and Mike and Madison have said, the partial claim passage is not going to solve that problem. It is going to be an important step in the right direction if that's what happens, establishing that program, but it's not solving that gap. It's closing it a little bit, but we're still going to have that in place. And I think it's, just to kind of build, the reason for the gap is how the particular relief programs work are really dependent on the particular nature of the programs themselves, right? Everyone has a little bit of a different insurance. FHA insures 100% of the loan. VA only guarantees about 25% of the loan. Fannie and Freddie have an ownership interest in the loan, so it makes it a little different. USDA is even a little bit different in their guaranteed program. So as a result, we sort of start from different places, but as we've heard, the data is very clear on what works, and that is having an option when people can resume their current payment, probably best when it is put at the end of the loan at 0% interest, and then something that doesn't guarantee payment relief. None of these options are guaranteed for borrowers, but that at least has a path toward providing payment relief when that is needed. And so right now, VA has neither. And it's slowly been chipped away. You know, I agree with that so much of it, what's been happening, it's hard to follow. That prior to essentially the middle of the COVID pandemic, VA was really doing well in terms of performance. That's because the interest rates were lower relative to where borrowers were, and you could just do a modification. That's what we've been doing since the financial crisis. It provided payment relief, and as a result, VA loans were really performing well. It is really this confluence of two events that has put us where we are. The one is what under no one's control. These interest rates just went up. And as a result, it really stripped this tool that had been so effective for a very long time. That happened in about 2021, 2022, And then at the same time, right around October of 2022, VA canceled its partial claim program, which was not as long-term as the other programs, and that took away the other half. So you lost your payment reduction option, and you lost your partial claim option. And since then, it has been incredibly challenging for folks who fall behind. I work with legal services attorneys. I was a legal services attorney. I represented VA borrowers and other borrowers in foreclosure. I work with those folks now, and it is incredibly frustrating to hear, and Madison pointed out, that these are really hard stories, folks who have their home, and they're seeing other options available for other folks, and they don't have them. So I think we had for a minute a respite on the giving payment reduction. VASP was designed to give payment reduction. It actually was a little bit overboard for someone who just needed to get back on track. It didn't do that. It just modified everyone at 2.5% interest because the VA took it on their books, but then that was canceled. So the problem has been going on for 4 years now, or 3 years now, I guess. So much so that we had a moratorium on foreclosures, which is not something you see that often. We, in fact, paused it, and that's part of what's going on is folks were put on a moratorium. They believed, okay, there was going to be something coming, and then the program disappeared, which from an emotional standpoint, and NPR has done some very important reporting on this. I know a lot of you have seen it. It's really put veterans in this whipsaw of we think there's relief. That relief was available for a very short time, and now it's gone. So right now, the option available for a veteran when they fall behind on foreclosure, if they can't do a repayment plan, and the repayment plans are very hard, those just increased payments. You don't hear repayment plan as the key here is, well, if you can't do a repayment plan, and you're like a lot of veteran borrowers who have a mortgage rate between, let's say, 3, folks have this 3.5, 4, we're going to give you a 7% interest rate. And what happens when you get a 7% interest rate? I mean, for some small group of people, that might, if you've been in your home a long time, but I think for the most part, if all we can do is give you a 7% interest rate and we're going to add on to your balance of your loan, that payment's going to go up. And if there's one thing we know, and HPC released the report, but we all know it too, when payments go up, that doesn't work for a modification. Those folks fail. Of course they fail. When you fall behind on your mortgage, you are probably behind on a lot of other things. You're in a rough spot. The reason payment relief works for folks who are in that space is they need that to bring it all together and to make their be able to be successful. Payment increases, they don't work. So that's where we are right now. And the last thing I'll say is 1815 and the partial claim program will do at least hopefully one part of it and allow people to get back on their feet when they've recovered financially, so if they can resume their current payment. But it only has one bite of the apple to it, which is not how the other programs work. There's some real questions about whether we can get the authority in now, because if we pass a program, how long are we going to take for it to be actually in place, which is really important for the people who are behind right now. And so then we have that part, but we still haven't answered the payment relief part, and we do have tools in other places that have that.
Well, thank you. Thank you, Steve. I see, whose card is up there? Just one moment. I do want to put a question out, and hopefully someone can briefly answer it. It's a brief question. What is an assumable mortgage, and how do these assumable mortgages work for VA loans? Who can answer that? What is assumable? Okay, so I'm going to call on Matt, and you can answer that question, and then also
Sure.
offer what you wanted to say.
So an assumable mortgage in 2025 is fundamentally a transfer of the mortgage, the rate and term that was originally agreed upon, to another borrower. In this post-Dodd-Frank world, the new borrower has to be underwritten to make sure that they can afford that payment. But fundamentally, this is allowable under the VA and FHA programs. One of the issues that we have tried to point out is the VA has not raised what they allow my members who are underwriting this new loan to charge. They've kept it at the same prices for 25 years. This is, again, one of those resource. It's a good idea. It's a good program. It's a good benefit to be able to sell your 2% mortgage. That would make this house even more valuable to a potential buyer. But if the company that is underwriting it isn't being paid even close to at cost for that, that does create real,
So it has to be to another veteran, though, right?
So it doesn't. You do not need to have a veteran status on that.
No.
Yeah.
Wow.
There's family member exceptions, but no, the assumability transfers beyond that. So there's very program-specific things, and it's very. I think last year, the numbers were something around 1,000 to 2,000. So it's a very small percentage of loans, but it is certainly a key program feature.
But it has to be a family member? Is that what it is?
There are, I don't have the program guidelines, but
Well,
it's broader. It's broader than certainly.
Members are like listening to this.
You do not need a certificate of eligibility to qualify in that way.
Okay, well, go ahead and say what you had to.
So two pieces on resources. So I wasn't planning on bringing up that example of assumability, but it's another one of these. With the growth of the program and the resources the program has, are they able to update things like that on a good, frequent basis? The residual income, I think a lot of us believe that's one of the real success stories of this program. Well, that's based on how much income is needed to pay your expenses. Well, there's a table. But with inflation, are we adequately looking at that and refreshing that? No is the answer. On appraisals, Madison pointed out you guys passed a bill to try to make, I think my members' view is appraisals is one of those issues that puts a bit of a stigma on the VA home loan program, that it's challenging to deal with, that there's minimum property requirements that are a little painful. That's something I know the realtors and us have seen similarly. Well, you passed a bill calling on the VA to improve that. It was a great bill. We thank you. What has the VA done with that? Nothing. They have not done any of. So you called on them to do a thing. There's been no follow through. It's a great idea. It's probably a consensus idea of how do they better align with other programs, keeping consumer protections in place, but making that perceived issue of the challenge of the appraisal less and more comparable. They haven't done the work because they're putting out fires on these other fronts. And then last point on servicing, we very much called on the VA to not wind down their regulatory partial claim program in October of 2022. We 6 months in advance said, don't do this, it's gonna be a disaster. They heard us. They felt like the budgetary constraints that they were under forced their hand. And I have to take this as good faith. These people were doing the best they could. What I'm frustrated with, though, is there wasn't transparency in what the constraints were. So one thing that Director Bell has talked about in front of you, there's a GAO study, is that there's been a rise in people using the program who have a disability rating, meaning they aren't required to pay into the program. And that's a helpful and maybe even good policy choice, that we're helping veterans with a disability status to not pay into the insurance fund. But if that is a growing proportion and that's causing strains so that they're not able to provide services throughout the life of the loan, that's something you and every stakeholder in this room should be aware of. Is that growing? Is that really causing a strain on the program? I've heard Director Bell say it is. There's a GAO study from 4 years ago saying that, but has it gotten worse? Has it gotten better? I, as a deeply interested stakeholder, again, it's just a transparency issue. If they need more resources, if they're struggling, we all need to know that so we can have honest conversations about how to help.
And you're saying we don't know. You're saying we don't know.
I'm saying they know, and I'm saying my members would know on their portion of loans how many don't pay the funding fee, but they know.
Okay.
They definitely know.
Well, I'm saying that, but they're not making it.
They're not sharing that.
Yeah, they're sharing it. I want to move the topic from the overview to avoiding foreclosures. And I'd like to, and I want to remind people to turn up their nameplates, put them down if you're no longer speaking. Avoiding foreclosures. For veterans in danger of losing their homes or who are homeless, I want to invite Sarah Brown from Pathways DC to share how your organization helps, and then call on Catherine Monet from the National Coalition of Homelessness. to answer what other suggestions does anyone have on how to leverage the home loan program to prevent homelessness. But first, let's hear from Sarah and then Catherine. Sarah?
Hi, thank you again. You know, I don't know that I have the answers to that, but I do know that with Pathways, the portion of the veteran group that I work with are veterans who are living with severe health challenges and living with severe mental illness. And, you know, a lot of veterans who do have service-connected disabilities that they are living with do want to purchase homes and become homeowners. And I've helped, with our program, I've helped veterans to be able to achieve that through the VA home loan program. Some of the challenges that we do run into is, you know, when they are experiencing an episode or when their mental health or health challenges, which could be stable for quite some time, but at times we all know, you know, we do sometimes have triggers that cause us to, you know, experience relapse or experience some mental health challenges that would interfere with our ability to keep up with our bills and pay mortgage. When they experience that, that's when they run into challenges. So we tend to help folks by, you know, working to utilize community resources. Sometimes they utilize their local funding, like through the county that they live in. I work with some folks in DC and Prince George's County. The local county resources that may be available to help folks are sometimes able to help them through I think it's the Homeowner Assistance Fund, various resources such as that. There are organizations like Friendship Place that we do call upon to maybe help veterans who have fallen behind. But the options for veterans who are paying mortgage are quite limited. So it's working with veterans to assist them in addressing the health challenges that they're experiencing, but also calling upon some of the local, county, and city resources, which are limited and sometimes do not provide enough assistance. But those are some of the resources that we do tend to use.
Well, thank you, Sarah. Catherine?
So I think if you all work on VASP and do everything that all of our smart housing friends say, that would be a really great first step. The second thought that I have is that I am eternally frustrated with the fact that when I talk to the folks at the Homeless Programs Office, they don't have a way to tell me where their inflow into homelessness comes from. So if you ask them, hey, we're looking at this VASP legislation and thinking about whether we should support or not, how many veterans in the homes database were veterans who also were foreclosed upon? They can't give me that, and they should be able to, right? I think on our hotline, we occasionally hear from veterans who have been foreclosed upon, and to me, it sounds like they don't really get information on homelessness programs. And, you know, I think we know it's not rare, but I think the data is 1 in 10 veterans who go through foreclosure actually become homeless, right? So if you're thinking about 92,000 or 60,000 or 80,000, that's like a big number of veterans that we could see entering homelessness. And it may behoove VA to think about giving information on homeless programs to veterans as they approach the end of the waterfall if none of the options are working for them.
So if it's 90,000, 60,000, 70,000, 80,000,
I mean, 1 in 10 of those
10%, that's
is,
going to be 9,000 people
that's a
that
big
are
amount.
homeless.
Yeah, and we've been working really hard to get those numbers down and do some really great prevention work. I think the last thing I'll say is that it is not very common, but there are, I think a Zillow report came out last fall, and it said that there are about 22 major cities in the country where it's actually cheaper to buy a home and pay a mortgage monthly than it is to rent. And in some communities, housing authorities are actually able to use Section 8 vouchers to pay for mortgages. And it feels to me like there may be some synergy there if you can like build up the right supports around this population to think about how you could make Section 8 or BRAVE or whatever it is that we're doing moving into the new era work better, right? And provide some homeownership opportunities for veterans. I mean, I think, you'd have to think about housing counseling, credit counseling, maybe even a small fund that could like help with maintenance and other like major expenses that would come up with homeownership. But it seems to me like a question that could be asked as we're thinking about the future of Section 8 and HUD-VASH and this new administration proposal on BRAVE.
Thank you. Steve, you have one to add something here.
I just wanted to underline a really important point here to why this is so important. Because the rental market across the country is so profoundly broken, it makes making sure people can stay in their homes even more important, because there's this idea, if you've been around this long enough, that, well, maybe people who can't afford their homes are going to be able to get into some rental that's better.
No.
That is not the case. And so it really shows like the homelessness aspect of this is very real, because if people are not given options that are what everyone else has, there's not like a discount rental market out there for the most part that they're gonna go to. This is going to be a family tragedy, which is why this 90,000, all these numbers are so crucial, and why I'm really glad that was brought up, because it's not like the rental market is here to save them.
Steve, I'm seeing among my colleagues agreement with you. I think we all come from communities where we're seeing the rental market, whether DC, California, Ventura, Riverside, Oregon, Chicago, Florida, rents are through the roofs. They've been rising at incredible rates, and that's a really incisive point. Julie, go ahead. Just make sure your microphone's turned on, because we need to record it. That's all. I know your voice carries in here.
Yeah, no worries.
Carrie when she wants to.
It's on. Yeah. I just wanted to do a quick plug that, community resources are going to be needed for this downstream loss now more than ever. And I think looking at alternative funding sources such as CDFIs, if you have veterans in your community, you have active, say, nonprofit lenders, CDFIs might be able to fill the gap for some of these folks. And I think it would be wise for VA partners to partner with institutions that are offering CDFIs to potentially fill this gap in the sense of an emergency, considering there's so few locations where Section 8 can go to subsidize mortgage payments for those folks. A CDFI could come in and be the saving grace between those folks who are between month 1 or month 6 of their, foreclosure process. I just wanted to plug CDFIs. Obviously, they're all
Just tell us what a CDFI is, those of us who don't know.
community development financial institutions.
Okay, got it. Members, just chime in if you have questions or a comment. I'm trying to read your name tag card over there.
Could I
Go
chime
ahead,
in real
Daly,
quick,
go
'cause
ahead.
it comes back to the CDFI question.
Is your mic turned on?
Yes, can you hear me okay? Delia Ramirez, I represent Illinois 3, Chicago, northwest side of Chicago and Chicago northwestern suburbs. And I want to just thank, is it Kathleen? No, tell me, Catherine. Sorry, I did LASIK. I can read here. After 4 feet, forget it. I gotta go back for my money back. But I wanted to ask just 2 real quick questions, just based on what I've heard all of you talk about today. One is I just want to go back to the high mortgage rates and the home prices that obviously we know just continue to rise across the country, and the correlation it has also certainly with affordable rents and so forth. But I'm really worried about the Trump administration wanting to privatize Fannie Mae and Freddie Mac. And I'm curious if any of you can talk a little bit more about what the effects would be if the administration would in fact privatize Fannie and Freddie, and what that would do to a VA loan rate and its access. Is that Mike?
We have been involved with this and published on this for a long time. Fannie and Freddie do not directly affect VA loans and loan rates, but they do because they are the majority of the mortgage market, have a profound impact on the overall market. So if, as many of us fear, privatization, particularly if it's not done carefully, would raise interest rates for the entire mortgage market. But to be clear, FHFA oversees Fannie and Freddie, and Fannie and Freddie don't buy or directly engage in VA loans. It's a huge decision, and with, I think, everyone who is in the mortgage market, it has profound impacts. And there's concern that things are being just tossed around casually. I mean, one thing that was tossed out is we're going to privatize them and put all the stock in the sovereign wealth fund. And that one seems sort of like a tail wagging the dog. I mean, you're talking about the foundation of our country's mortgage system. So great caution should be there. One thing that we also, and I think many of the participants here that have endorsed that if and when Fannie and Freddie are released, that there should be, that they have a dominant position in the market because it's duopoly. There are only two of them. It's an essential service, and they have a huge advantage. I mean, as the president said, we're going to back them with essentially the full faith and credit of the government without congressional action even. But that means, and they have massive data, massive technology that they've built up, but they can crowd out the private mortgage market players who are critical to our system working. And for that reason, many of us here have endorsed publicly that they be regulated like a public utility, because that is what they are, in effect. They have a special status, a critical role, but that means you should have, which they would not have without steps being taken if they release them from conservatorship. They'd essentially be turned back where they were before the crisis, with, it'd be, in a sense, like a utility with no cap on what they can charge and what they can do. And so we think those kind of aspects are not minor details. Again, you're talking about making a dramatic change to the foundational part of our mortgage market. So your concerns are very, very well
Thank you, Mike.
positioned.
No, absolutely. I just want to ask one quick last question, and I know a couple of other colleagues may have questions. I want to now turn to the VA loan program. We know that historically, we've used the proceeds of the program to pay for staff and the infrastructure, at least internally. I guess my question is this appropriate, and should the office have additional funding beyond the collection of those fees in order to be able to keep up with the capacity needed? It's just like a nod, yes. We need to have its own, and it's not appropriate. Got it. Well, I'll pass it. That was the quickest. Yes. And get yourself a specific line item. Got it. Thank you. And Madison, did you want to add? Yeah.
Yeah, just really quickly on the question regarding release. I think I just want to really emphasize MBA's position on that we are supportive of in all caps, a very, very thoughtful, meticulous approach of release, that it's done in a way that mitigates a lot of risks that would be present if you rush a release, and that we are strongly against any kind of release that does not involve congressional involvement and legislation that would make sure that the full federal backstop is maintained.
Thank you, Madison.
If I may add just one thing on your point about the funding, we do that for FHA. We mandate that the loan fees on FHA, and it's sensible, can only be used for the insurance fund. And Congress appropriates separate funding each year for the staff and the operations. And so VA is, if you will, out of sync with the long-standing model of VA, of FHA, and I think that definitely needs to be correct.
Well, thank you so much for being here. In my state, which is Florida, we have a huge homelessness issue. And when the secretary was here, myself, along with Representative Brownlee, we pressed him about the enforcement and implementation of the Elizabeth Dole bill, which had grants, per diem payments, and also flexible spending when it came to our homeless veterans to make sure that we prevent homelessness and make sure they're not homeless. Have you seen any kind of implementation, any movement from this administration to make sure that they're actually working towards preventing homelessness?
So it has been slow going. I will tell you that there are a couple provisions that they don't yet have appropriations for. And there is one provision that you all were so gracious to tie to HR 1815. It was a technical fix to lift the authorizing cap on the grant and per diem program. But I do think that if, we don't have any VASP solutions, it's going to be even more critical to push VA not only on those programs, but some of the other things in Dole to make sure that we've got like a robust crisis response system in place.
Yeah, I mean, and we've seen the implementation through like the VA, the HUD BASH program, through expanding eligibility for vouchers, things like that, but not as much when it comes to crisis prevention.
Go ahead, Dr. Dexter.
Thank you so much. Really appreciate everyone being here, and I feel like my head's exploding with the idea that our veterans have the worst opportunities for homeownership. So thank you for making that so clear and what we need to do. I have two different lines of questions I wanted to ask about, so I'll put them out there and see who wants to take them. One is the appraisal and loan process that I've heard that real estate agents may point people, veterans, in other directions because of how problematic that can be. I would love to understand more and what we can do to mitigate that. The other option or question I'd love answered is savings, active savings programs for people while in active duty. Is there such a thing that exists? I know that many of our first-time home buyers in Oregon, especially from marginalized communities, we have state savings programs that we can match funds or put in incentive funds so that they have a nest egg when they are ready to buy a home. Is there such a program for our veterans as they finish their active duty or not when they are ready to buy a home?
I'll jump in on the first one and welcome the realtors or others who have been focused on this appraisal issue, but it was kind of my theme was there's a well-intentioned infrastructure that the VA has put in place with appraisals. They have their own appraisal management system and process. A market-based person might call it, they have price controls. They set what it can be charged. They don't update it frequently enough, but these are all well-intentioned things to try to protect veterans. They have something called minimum property requirements, which we want veterans to live in safe, habitable housing. But if an appraiser goes out to the property and sees something that they think is a problem, they kind of switch hats and become property inspectors, not something they're trained to do, identify them, and then the veteran is not allowed to pay to fix the issue like they would be if it was any other type of property. And again, that's well-intentioned. We don't want veterans being taken advantage of. But by making the process different and sellers being aware that if I have a veteran buyer and there's a problem, I have to eat this, that difference, that well-intentioned difference causes, I think, whether you want to call it a perceived stigma, an actual stigma, but this is where we see anecdotal reports that on certain MLSs, huge percentage of properties say, we don't accept this home's not VA eligible. Whether that's loan officers doing that, my members, whether that's realtors, I think we all should want veterans to get this great program from a down payment standpoint, but we should take a hard look at, do these well-intentioned policies effectively serve veterans, I think, on minimum property inspection requirements? We think that's always going to be in an interest, protecting first-time homebuyers, but the same things that the GSEs do, the same things that FHA does, would work just as well to protect consumers, but help reduce that stigma. So that's one thing we've called on. Again, I'll highlight, you had a really good piece of legislation calling on them to do this. We got to get the follow-through from them to kind of meet you with your legislative intent. But I'll turn it over to, I know there's others who have thoughts on appraisals.
I am not the appraisal expert for NAR, but as far as, just to echo what Matt said, the realtors, we are very supportive of the program. I think it's actually, frankly, probably one of the best mortgage options out there on the market. I mean, truly. But again, we are seeing issues where veterans are feeling less competitive. And I'd be remiss if we didn't mention that we have a housing supply crisis in this country. So we can make all the best changes to the VA home loan program, but if we don't have housing supplies, we're not going to get veterans into homes. So yes, we are fully supportive of program, preserving the integrity of the program. But if changes can be made to streamline so that veterans are just as competitive as a conventionally financed buyer, an FHA buyer, even try to compete with a cash buyer, it's possible. I just bought a house and beat out a cash buyer. If we can make those changes and really give them that market competitiveness, I think it would be helpful.
Do you have another question? Okay, great.
So I don't know if anyone has ideas about a savings program or incentive program. Great, thank you.
I will tell you that it's not widespread. There is one organization I know about in Salt Lake City who runs a tiny savings program. I think they house less than 5 veterans a year because it is literally one guy and his lender friend who are doing the Lord's work. There is another bigger organization called Soldier On. They're headquartered in Pittsfield, Massachusetts, and they partner with the Berkshire Bank, I believe, to run a similar savings program. But the housing that they offer is actually co-op housing, which I believe you can't use a VA loan on. And so I think they just use the local bank and their local regional programs to help veterans buy into their co-ops.
Ms. Brownlee?
Yeah, just to follow up on Dr. Dexter's inquiry too, and I have a bill with the National Realtors, and it's the bill is to be able to, it increases the ability to use IRA funds for down payments for first-time buyers. So Congress passed in 1997 a tax provision that allowed for $10,000 out of your IRA, and this bill is simply to increase it to $50,000. So it matches or is more. It's to kind of meet the market realities that housing prices are higher today than they were in 1997. So this isn't specific for anyone, for veterans or anything, but you were talking about some kind of savings account for a first-time buyer. So maybe you want to sign on to my bill. Yeah.
We've been joined by Nikki Budzinski of Illinois.
Thank you.
Welcome, Nikki.
Thank you.
Should we move on to this final one? Yeah. So we've kind of, I think, exhausted the avoiding foreclosure topic. I want to move on to the final topic, which is how do we increase program usage? So I'm going to ask Mr. Son Nguyen with the Veterans Association of Real Estate Professionals to share thoughts about how we can increase home ownership among veterans. What could be done to make sure veterans know about this benefit?
Thank you, Mr. Tagano, for having me here. I want to take a look at it. First of all, I want to say don't let the name fool you. We are a hybrid of the organizations in here. We're not formed as a trade organization. We're a 501c3 nonprofit, the only HUD national certified nonprofit and registered VSO, not a traditional, because we focus on the areas of the VA loan program, financial literacy education, being a HUD approved counseling agency. With that said, I want to take it back, and I've listened to this room and treat it very holistically and ask a simple question, right? I did ask the question on why the VA loan program has not progressed and why are we having these challenges. And first of all, the program is actually a benefit. It's a VA home loan benefit. And the biggest thing that baffles me amongst the whole time is just celebrated its 81st birthday on June 22nd, the VA loan program, since its inception, 1944. But it's had and it's suffered all along without representation. What the core of this country was based upon, okay? No representation. That was solidified when I heard back from the VA's Office of the General Counsel a couple days ago when we applied for VSO accreditation, and they sent back an email saying, sorry, Mr. Nguyen, but you do not fit the statute of the claims. The VA loan program does not fit that statute of the word claims, so therefore anyone, right, can help. You don't have to be a VSO. It's with that attitude that no one has stepped up to help, and that's why we're at this particular time. I wrote back and I told them that they were wrong, okay? They're wrong because the VA statute states that a claim is started by electronic submission for healthcare, for education, for the rest. The VA loan program, the certificate of eligibility, is started out with an electronic submission. So technically, it is a claim. Now, instead of arguing and wordsmithing, right, the policymakers, the VA, that can be changed administratively, right, for their point of view. For so long, the benefit has not been treated as a benefit, okay, with that definition. So it is the only benefit without the wraparound supportive services that it has deserved. There are the other benefits, education, healthcare, GI Bill, they all have the VSOs to be their advocate, to be their claims, to do their appeals, to be their caseworker. They all have that. All the other benefits afford that. But the VA loan program does not. And we ask our questions and cannot get answers back for homelessness, foreclosure prevention. Let me start out with home ownership. That is the light at the end of the tunnel. But before you get there, you need to be financially prepared, secure. So we need to view the VA home loan benefit program much more than just home ownership and a product. We must view it for what it is, preparing our veterans, starting in the service, integrating that in with counseling, okay, with counseling. With the 12 touch points for financial readiness that the DoD instruction gives, we must incorporate the counseling part in there. Mr. Takano is a lifetime educator. He knows that education alone, and you can agree with me on this, without the homework and the reinforcement and the follow-up known as counseling, is only, it does not work. It's not sustainable. And right now, the challenge we have is that we have a product that needs to be recognized, a program that we recognize as a benefit with the education and the services wrapped around it. I give you we face it every single day when we counsel many, many veterans, right, that go and they get their COE, Certificate of Eligibility, and they get denied for whatever reason. Somehow they find us and we help them through that. We represent them. But what about the 8 others that don't? Where are they going? Who is their resource? I have a different number on the default. I have over 150,000 because 68,000, 90,000, 80,000, that's 90 plus days. Why are we waiting 90 plus days? Why can't there be, right, a notice to when they're on their 31st day or their 45th day? Okay, so I say that right now the loan crisis is well over 150,000 beginning on day 31, okay? But we're just considering with the VAST program and the part 1815 just for the 90 plus days. Now, getting to that, how do we increase it? We've here talked about VA loan bias, okay? There is a lot of VA loan bias from the real estate and the lending industries. The best way to do that is to educate, okay? We've done that. We've come out with certifications for lenders and real estate agents for the past 13 years. We've educated thousands. We are a CE credit provider in 20 states. So education is the key there, but not only education to the real estate lending, but also the housing professionals, okay, to the counselors. They are certified under the HUD system to work with LMI, okay? They are not certified to work with veterans. We are the only ones. We are in the process of writing a veteran, a military certification for housing counselors. So you must educate the professionals, but more importantly, you have to educate the veterans, the service members, the ones who are eligible. Get them financially prepared, educate them. You can't take a right or a benefit away from someone that is educated, okay? So that's the second prong, all right? And so education, and then I agree with the colleagues in here when it comes to modernizing the MPRs, include MPR waivers, okay? Matt and our organizations, we teamed up to write on the MPRs to modernize that for the VA. I also agree on the appraisals as well, okay? The challenge with VA loan bias is if you have bad actors that are real estate professionals, lending professionals that have a hiccup, and then all of a sudden it spreads, and that's why you have VA loan bias.
What's an NPR?
Thank you. I was going to just ask that.
Like Matt said, they're minimum property requirements, and the VA wants safe, sound, and secure are the three bases that they want to work on, and that's great. However, their MPRs, it needs to be standardized to the other loan products, okay?
Ms. Budzinski, you have a question?
Yeah, maybe actually just following up on that NPR. So one of the things I understand with a VA home loan is that a veteran, in order for the home loan to close, they have to have a VA appraiser. Is that a part of the NPR program you're referring to? Okay, because a conventional home loan, from what you know, does not require that. So if I am curious if that is a barrier, you know, to closing these home loans, like if there is some structural issues that are addressed through that appraisal process, like what would a veteran do to kind of help get to their home to a final closure if there's structural needs that they have to address but maybe don't have the immediate financial wherewithal to do that?
Absolutely, and a lot of people don't know this, but it's the same appraiser, right? That typically, it could be different, but for in general, an appraiser is an appraiser. They can appraise for the conventional, FHA, and VA, right? So they're authorized if they want to appraise for all three. They just apply different standards when they do it. I would say that currently at this point, if it does not meet an MPR, the seller, right, is then moving forward. They want to sell that home to be able to fix it, okay? It does put a veteran at a disadvantage at some points, okay, to doing that. What we like to do, and seconding Matt's thought, is have exceptions, have waivers. I've always been a big believer if the veteran, right, it just depends on the MPR. Some of them are very minor. I mean, very, very minor. If the veteran, with the wherewithal, understands and accepts it, right, they should be able to be granted a waiver to then experience home ownership, not be a barrier over it. But under the current, it's not possible.
Just quick addition is in the conventional space, properties are given a rating, 1 to 6. 6, Fannie Mae and Freddie Mac, the appraiser has said that property condition is so poor, we're not willing to make a loan without significant, like a rehabilitation loan. So there's certain categories of loans that I'm with Son that like, that's not appropriate for probably any first-time home buyer without a specialized product. But on, we'll call it a C3 or C4, these are, my home would be a C3 or C4, it's an older home. There are going to be issues. These still show up on these minimum property requirements. There's a banister problem, there's a problem with a shed, things that are not life, safety, foundation. We can make the loan, but we have to address them before the VA will guarantee it. And again, the veteran can't pay, they're not allowed to, which then again causes this potential stigma. So this is where I think San's idea on ratings where the home is fine, but there's peeling paint. That can be an issue. It's not that shouldn't be addressed, but it's not unsafe to lend on that product. So maybe we should allow the veteran to get a waiver when we're not concerned about.
So MPR means minimum property requirements.
That's right.
That's what that is.
And it's a well-intentioned idea. It just hasn't been modernized and streamlined, and I think that's.
So we need to kind of drill down on the distinctions a little better, so that that's a meaningful distinction, not a stupid distinction.
Right.
And I said it earlier, but I'm going to say, you guys passed a law in 2022 calling on them to look at this. You did the good work. We just need the follow-up and oversight of what are y'all doing about this? It's been 3 years.
So they haven't, VA hasn't really implemented, they haven't really regulated or
They put out an advance notice of proposed rulemaking saying, hey, we're considering this. So that's where a few of, I worked with the realtors, I worked with MBA, I worked with VA rep, that we have an idea. But that was almost a year and a half ago and just,
so the rulemaking hasn't happened on that law.
Yeah.
that's right.
Can I just ask too, how hard is it for a veteran to get a waiver right now? Okay, that's the answer.
It's not possible.
Okay.
We need to act on this. We really need to modernize, get the resources, and I'll just finish up by saying the biggest resource that the VA needs is to implement the same type of HUD counseling and education afforded to the civilians. We are second, I'm a Navy veteran, we are second-class citizens on a benefit that's not treated like a benefit, bottom line. It's work for the civilians, why can't it work for us? And you don't have to create infrastructure within the VA to do that. Take advantage of already the thousands of the HUD counseling platform that is already there.
All right, Mr. Calhoun.
A lot of this goes back to the fact that VA is grossly under-resourced, and they're managing a vastly increased program that is hugely important and, in fact, owed to veterans. And so it is hard for them to carry out these things. I want to be clear that they're dedicated folks at VA. They just are nowhere close to having enough to run a now major mortgage program. And I want to raise one thing because this ties directly to a concern we have about 1815 is it provides that that this partial claim program can be implemented by guidance and subsequently followed up with more detailed regulations, but that you can provide some relief before you go through the full regulatory process, which, as we've heard, even at other agencies, can be a year or more. A concern is that authorization in the current bill that allows it to be done by guidance does not apply to anybody who becomes delinquent after the enactment of the bill, if and when that happens. And so, given that regulation likely will be a lengthy process, you are going to start this same crisis again for a new cohort of veterans if there is not, that provision we have recommended along with many here should be expanded and just say it can be done by guidance until the regulations are implemented. So you don't create another crisis that we know is extremely likely to happen.
So I just want to make a quick comment. You have another question?
No, go ahead.
So I go to medical centers across the country. I never hear a complaint that we're overstaffed. It's always we're understaffed. So if we talk about the VHA, so if we're talking about the VBA or the benefits side, and this little aspect of the VBA, which is the home loan program, and that we don't have a separate funding mechanism based on the fees, right? So you're saying that FHFA and Fannie, everyone else, the government backstop programs for non-veterans, that there is separate funding for staff, separate funding for the insurance program. That's what I heard said today.
The insurance programs are structured so that the fees charged on the loans are supposed to be sufficient to cover the insurance program. But that the operational part is paid for by separate appropriations.
Separate. So operations, separate appropriations, fees pay for the insurance, the backstopping. Doesn't work like that at VA. And so I'm putting this in the context of 80 to 83,000 folks at VA targeted for cuts. But in order to what I'm hearing here is that in order to maintain this program and to administer it properly, and it's been growing, which means more fees being paid in to the insurance program, but it's a successful program. We haven't been losing a huge chunk of money. In fact, what I hear, we actually make money on this program. We actually make money on this program with the jumbo loans, right? And we use it to pay for other bills. I mean, that's our pay for. That's how much pay for we get as a committee, is this loan program pays for additional programs. So it behooves us to make sure that we take care of this program and that we adequately staff it. And I'm also hearing the other big lesson today is that allowing veterans to fail, we won't eliminate failure 100%, but it's the least expensive course of action, right? To allow them to be foreclosed upon, go on some homeless program, the lenders lose, the taxpayer loses. More often than not, a greater share of the win is going to come from if we keep the veteran in their home. Don't allow them to fail. Modify the loan, assume the loan, whatever, all of the above strategies that we have. And we've learned a lot from the non-veteran programs as well as a kind of guidepost. Those are the takeaways I've come over with so far. But I wanted to make the point, because maybe they'll clip it and use it, my staff and our media, is the frickin' 80,000 person cut they're going to do. And here is clearly a case where you're saying makes no sense. Industry, our private sector folks saying makes no sense to cut. That we don't adequately staff this veteran home loan program. It's going to set our veterans up for more failure, and it's going to set the taxpayer up for more failure. So I'm in the business of real Doge, real government efficiency, real efficiency, not AI, not stupid AI efficiency that cuts grants and actually has a worse outcome for our taxpayers and worse outcome for our veterans. I'm for real government efficiency. And in this case, it means adequately staff the VA home loan program. And so it's a good thing that we don't have veterans pay, disabled veterans, 100% disabled veterans pay into the insurance program with fees. But if they're not going to pay in the fees, I want to know I want to have a transparency on what impact it has on our insurance program, what impact it has on our ability to hire enough staff. So anyway, I see, is your card up again, or is it, or Matt, you have something to say? Go ahead.
And just to build on that point, Ranking Member Takano, if you were to go on the VA website and look at the guidance that veterans are given in the absence of the VAST program, they're being directed to contact a VA home loan technician who would then offer guidance, information, counseling on how to navigate this very troubling process. Before this roundtable, I had an opportunity to review the nearly 200 mission essential positions that apparently are not subject to any of these cuts, but I'm sure time will tell whether or not that is in fact the case. But these technicians are not included on that very expansive list of mission essential personnel. And so what ROA would offer is, if it is the case that at a minimum 67,000 veterans or as high as 150,000 veterans, may be experiencing such a challenge and they're being encouraged to contact this individual or this staffing personnel, that they should at the very least not be subject to any reduction in force. Just want to build on context there.
Thank you for that. This may be the subject of a letter that my colleagues and I are going to be on, because the big takeaway, the changing interest rate environment, the volatility of our economy. I could throw in tariffs, projections that we may be in a higher risk for a recession, But certainly inflation is still a factor, and this is not me talking, this is the Federal Reserve analyst talking. And so getting down to what is essential versus non-essential, and who should be protected from cuts and who shouldn't, I think, and this ties to, I think, increased risk of homelessness among our veterans. And so I think these are all very salient, emotional points to be made. Eric, and then I'm going to call on Eric and then Christina. Eric, go ahead.
Just to build off of what Matt said very quickly, that when you call these technicians, oftentimes they don't have answers for you. And so if you're calling and asking and saying, hey, I'm behind in my payments, I don't know what to do, short of the VAST program or some of these other programs that might have been available in the past, they're pretty much, well, talk to your lender, talk to them, see what they can do for you, see if there's a program available. They're not equipped to really give you answers and solutions that you might be needing. So certainly any cuts to them would be the opposite of what we need. I would say we need additional training so they can point you to not only other government programs that may or may not be available, hopefully that are, but additional outside resources that are available through the nonprofits, through NGOs, the VSOs, et cetera. Because when you're in your darkest hour of need and you go to the VA and say, hey, you backed this loan, now what? I'm out of time, I'm out of luck. I know for me personally, I was told, well, good luck, have fun. Not a lot of resources available. And you should be able to count as a veteran on the VA to at least point you in the right direction. If they don't have the answer, they should be able to tell you where to go. So we need more and higher quality training in that area as well. Certainly not a reduction.
Thank you for that. Christina?
Yeah, I just wanted to give a few comments about your question on how we can improve outreach to veterans about the program. Part of that was mentioned earlier, having transparency on VA side so that we have the data and information so that organizations can provide that information to veterans and some of the stakeholders and industry groups here. So transparency, I think, is critical to this, and data. But also, we have reviewed legislation in the past on how VA can inform veterans basically at any touch point that they might experience VA about other programs. So when veterans apply for their disability benefits, they should receive information immediately about their other benefits, including the home loan. When they receive their rating, they should receive information about how they can get the funding fee waived. So we've seen that in other contexts, but not specifically with the home loan. So at every touch point, veterans should be given this information, and VA should be able to do that with the information they have. Additionally, certain expansions to the program could be very beneficial. For example, we've supported legislation that would expand to National Guard and reservists as they accumulate some of their active duty time instead of in blocks of time to be eligible for the home loan. And a lot of these folks would not have a disability yet, so they would be paying into it. So that would actually add money to the program, and it would expand the benefit to folks who are wearing the uniform and who need that housing stability, should have that housing stability while they're serving, but are also coming back from active duty and being at home. We support the legislation to expand it to co-ops. If you look at New York City, there's a large number of veterans that are not homeowners. So we want to ensure that veterans have the stability, and this could be an additional option for them.
So,
Yes.
I want to ask you, so you were commenting on active duty being eligible, you're saying? You would expand it to that?
So currently,
Reservists.
reserve and guard, reserve components.
Reserve and guard components.
So as they, because they may not have consecutive active duty time.
No, I get
but-
I
yes.
just missed it, that's all.
But to your point, I mean, also for those currently serving, as they are approaching their separation date, we'd like to see them be eligible for the funding fee waiver if they're in the process of applying for a VA disability claim until that decision is made. so that they can move on purchasing a home before they've actually fully gotten out, because they may know where they're going to be moving to and need to buy a home quickly. And if they're already in the benefits delivery at discharge process for a disability claim, they should have sort of a pause on paying that fee until their claim has been decided.
And if the claim is decided long after and it's negatively determined?
BDD claims are typically expedited, so it would be less than a year, but usually within 3 to 6 months that decision would come.
Sounds great. So, this was my next question. I'm going to get to everyone else, but Julie, I was going to call on you as well as Christina to answer this particular question about what does effective outreach look like, and do you have anything to add to what Christina has?
I think my colleague did a wonderful job of describing better outreach channels. Obviously, we have very different focuses when it comes to our membership. VFW leads the way for BDD claims. They get access to like that brand new baby veteran. Our members obviously come to us through the rehab process at VA post-injury. I do find it somewhat ironic that every time we ever have a conversation here, we talk about best ways that VA can do outreach about literally anything and everything. I think it's important to recognize that throughout a veteran's life cycle, they're not always going to be in a position to buy a home as soon as they get out. They're not always going to be in a position to buy a home 20 years out. I've been out of the military for 20 years. I'm nowhere close to owning a home. There is no singular outreach method that's going to work. It's just like when you guys run for office. You have to use every single stream at your disposal to get the word out. There's all these different moments in a veteran's care and engagement with VA where there's an opportunity to stress to them, hey, are you aware of this? But I do think that when it comes to the lasting life cycle of this program and its sustainability, we cannot look at this as a VA-only issue. National Association of Realtors talked about a housing crisis. You all live in districts where your rents and your homeownership rates, the cost of a home is going through the roof. Single-family homes are being bought up all over the country by private equity firms. I mean, this is not a singular issue that only hits veterans. We're just talking about one benefit. As Son mentioned, this is a benefit. This program needs to be staffed. This needs to be funded because none of this exists in a vacuum. There are all these other societal issues that play into all of this, which is why we're here in the first place. We took the program for granted for the entire time it's been around until the crack became so apparent that now almost 100,000 veterans are at risk. VA knows how many of those 100,000 veterans-ish, 90, 80, 60, they know how many of those people, this is their primary residence. Those are the folks that we need to prioritize. If this is an individual from a marginalized community, if this is someone who this is their only pathway forward to a better future for themselves and their families, we need to ensure that VA is being transparent about who is most at risk in this situation. I'll get off my high horse.
No, your high horse is especially what we need right now. So I'm going to call on Mike, Son, and then Matt Schwartzman. And then we're going to bring this to a close. But go ahead, Mike.
Thank you, and I'll be brief, but this is, I think, really important. I want to clarify what the economics show on this. It's actually, it makes the situation, if you will, even more outrageous. The data show that providing the robust loss mitigation not only saves money, saves the borrowers, saves money for some of the participants, it saves money for the governmental entities. This would, implementing this, the data convincingly shows, and I, again, refer you to the excellent papers that Housing Policy Council just put out this week on this with very detailed analysis. If VA adopted this, it would save them money in addition to better serving veterans. It's what we have here is sort of what you talked about. There are some structural obstacles, and they need to have the staffing to run this program. This is like losing the war for loss of a nail, that because they don't have that, they've thrown out the VAST program, which is a disaster for veterans, but it's in the intermediate and long-term disinterest and cost to the Veterans Administration. And let me be clear, not all modifications will be successful. There'll be a good number of them that will fail. The analysis takes that into account and says, even taking into account that some modifications will be unsuccessful, these programs save money for the government. It is insanity for this not to go forward. It's not a matter of we have to spend more money. We should spend more money to make VA work right. But implementing this program is a win-win. And you don't get a lot of those, and that makes this just craziness what we're at right now.
Well, I keep thinking about real Doge versus fake Doge. Thank you so much for that, Mike. I mean, this is such a huge contribution to my understanding. San?
Yeah, I just wanted to add on to 2 points. To Eric's point, Eric is fortunate enough, and Eric, we are boots on the ground. We deal with thousands during the ending of VASP and then the ending of the PCP in 2022. There are thousands and thousands upon veterans that find us, have nowhere to go, and reiterate what Eric has said. The VA loan technicians are not properly trained, okay? The rollout of VASP, they did not train them properly. They also did not train or give clear direction to the servicing industry. So at the end of the day, the rollout implementation, because of the lack of resources, who ends up losing? That would be the veteran, okay? Take Eric's situation in your district, we've helped hundreds, right? We have the stories, that we have it's not anecdotal anymore, it's real, and we have them because we help them every single day. With the ending of VASP and without a solution, they've become more frustrated. We are representing them at this particular time. And when we've been around, a lot of members have asked me, San, what is your opinion on how do we mitigate redefaults, okay? Redefaulting. To me, the answer is simple. All ties back to education and counseling. You track them, they'll take it. But then, at this juncture, 1815 does not have a mechanism in there. Once you give them help, how do you then help them life after default to stabilize them in housing financially? You need that mechanism. That mechanism is just not for 1815. That mechanism is for establishing the VA loan program and putting in and authorizing a housing and counseling portion of it to duplicate what HUD has already had, and it's working.
Thank you. Is there any effort to try and put these elements into the Senate version?
Well, actually, we had some Senate staff here. They had to step out. But we had discussed with the Senate a number of edits after getting some technical assistance back from VA. We are planning to do a technical fix later in the year to 1815, so perhaps we can include some of these elements in that.
So the technical fix wouldn't preclude, a technical fix could possibly include some of these suggestions?
Yes, absolutely, because it'll be a fresh package. Yes.
Go ahead. And then I'm gonna call on Matt. Go ahead.
Yeah, I think for our position at MBA, we support exactly what Justin laid out. We think because the need is so great that we don't want the perfect, I guess, to be the enemy of the good on this, and so passing HR 15 as is as quickly as possible. Hopefully there's an opportunity for that coming very soon, and if then, like you said, working to make this much better and keep improving it and having that come within the end of the year. And I think that's what's being included in negotiations, at least that we're having even with the Senate.
All right, well, I don't want to take up this moment with whether we put it in or out, that kind of thing, but it seems like these are important things to try to fix. Matt?
Regarding communication, first let me say it's ROA's view that this is a shared responsibility between both the Department of Defense and the Department of Veterans Affairs. If for no other reason that certain programs such as the Transition Assistance Program require that collaboration at that specific point in time. Now, I understand that the Secretary of Veterans Affairs, Secretary of Defense recently signed an MOU striving to strengthen that partnership, but ROA believes that communication and information dissemination needs to be a pivotal pillar as part of the Joint Executive Committee's strategic plan. And so we would ask for inclusion or an amending to the law for that to be a pillar that's incorporated in that plan. Regarding data collection and training, I want to point out that the VA rarely, if at all, disaggregates its data collection on the basis of service component. And so ROA's premise is that the VA system systemically is tailored towards the active component, and reserve component members and their families are treated as secondary class citizens, within the military. And so requiring the VA to disaggregate that data collection on the basis of service component to include both the Federal Reserve and the National Guard helps to paint a better picture for how VA is meeting the needs of all veterans. And that also extends into training. I appreciate you bringing that point up, Eric, about how there are certain VA staff who may not be adequately trained. In the context of the VA home loan program, when you look at the service documentation that is required, it would either be a DD Form 214, it would be an NGB 22, or it could be a retirement point statement. Now, Ranking Member Takano, I don't know if you've ever had a chance to review a retirement point statement from a reserve component member. It's highly complex, highly confusing. It took me about 2 weeks alone just to try to get a basic understanding of what that looked like. And so tailored training to VA staff on how to properly handle reserve component claims throughout the process is equally vital to ensuring that the VA is a proper steward for the citizen warriors and their families.
Well, thank you. Perhaps we can, if this disaggregation, if it's not going to be a significant cost, we can try to take care of that in an NDAA amendment of some kind. Otherwise, we should try to incorporate it into the parity bill that we've got pending, but that parity bill is pretty expensive, and I don't want to wait for the disaggregation of the data for that. So maybe the better way is to have a member try to build bipartisan support for an NDAA amendment, so we get ready for NDAA. Let me just say that I'm going to bring this to a close. I have some final thoughts, and I want to thank everybody for their tremendous expertise. We've learned a lot today, and building collegial understanding of what the issues are. So I just like to make sure that I know it's not easy to be continuously on guard and ensuring veterans' benefits aren't being cut. I appreciate you all taking the time to be here and help us figure out how to keep the American dream alive for veterans and their families who have sacrificed so much for our country. Homes are our sanctuaries where we go to rest and spend time with family and loved ones. Owning a home gives us a sense of security and belonging to a community. It gives us skin in the game to care about local issues and engage in civic life. It is about a sense of belonging, and the more people that feel that way, I think is going to be a better place for our country. We all want veterans to have an opportunity to own a home so that they can enjoy after spending so much time carrying out their duties to protect all of us, our nation. So I want to thank all of you for your participation today and continue to help us safeguard and improve the Veterans Home Loan Program. Thank you, and thank you all for coming. Thank you. Thank you. Thank you, it was good.
Yeah, I can't remember where. We
didn't like the property condition rating. They think property condition rating is
we didn't?
Oh. They think condition ratings are too subjective. The argument then was, is the racist appraiser going to be...
Yeah. I can't follow.
They had a bias concern, but fair.
I don't know. I need to. Or I don't. Maybe I don't need to.
I basically...
It's just like, can you guys deal with Andrew, I guess.
Yeah. You know.
But I mean...